everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Monday, December 14th, and it seems like, that little kind of sell-off that we had last week, it seems like we're turning the corner, which is kind of nice. Tesla is moving up nicely today. I did do a buy-stop order and bought in at about 6.15. It's moving higher. I'm probably going to do another buy-in probably at about 6.50 or so. I have another buy limit order, buy stop limit order ready to trigger if it goes above that. And so yeah, I mean it seems like it's settling back to the normal pattern. And hopefully this will be an up week as some of the things get sorted out politically. And maybe we can see if it's going higher. For everybody looking on TikTok, we are simulcasting this live on YouTube at youtube.com/Dallas Trading Floor. So, without further ado, let's make our way into the slides here. All right. So basically, what's happened here is that the market direction, we are still in a confirmed uptrend, which is excellent. The S&P is up. It's holding its own. Dow Jones right below that 30,000 mark, which is so key. It's down a little bit, just backed off a little bit. Of course, that's a key metric there. The volume, it's up a little bit today, so higher than average volume, and of course the Nasdaq is up. So that's a good thing because many of the stocks that we buy are in the Nasdaq, and that's kind of where we like to be in that metric. So basically, here is the Nasdaq Composite. We did have kind of a down week last week, and we pulled back, but we seem to be on the mend and moving higher. So hopefully, this is gonna be good. We're up 114.84 bucks today for 492.71 and almost a percent up. This is, of course, the Nasdaq Composite. This is the entire Nasdaq. We do have some good volume coming in as well, so it looks like maybe we're back to the Santa Claus rally. I'd hope so. That would be an excellent thing if that were the case. Just wanted to show also the S&P. It's up too, not quite as much. 36.64.42 on that, and we do have it's up about 1.3% versus Friday, so that's kind of a good thing going on there too. We do have we have had a little bit of a down market on the last few days before Friday, so it's nice to see it pulling to to a higher level. I mean that's good. So we kind of have sort of the all clear. Now I would just kind of want to show you Tesla. It's up $29.11 today. Again, I used a buy stop limit order to buy in at as it crossed into above 615. That was a critical point that I indicated. Now, if you look in my chart school, which is on YouTube, youtube.com/Dallas Trading Floor, you'll understand how I'm automatically buying this as these are moving higher. So this is called a buy stop limit order, and it can be very helpful if you have a busy day and you don't have the ability to watch the screen all day, as I do. You can set the order in, and if it moves above a certain rate, then it's bought. And that's how I typically like to buy in on more volume and more price. And it's up today. Volume is up 27%. And again, it has a composite rating of 99. So this is an interesting way. Now, I'm going to have a secondary buy point at about 649. I'm going to be buying another position in at 649. So that may happen tomorrow. Don't know. Don't know exactly. What's going to happen there. But that's gonna be probably how I'm gonna be buying in the stock. So so that's kind of it. I did update my current holdings a little bit today, and I did put out a video on Zscaler, symbol ZS today, but I have not bought it yet. I am waiting for it to move higher on higher volume. Currently, I'm in NET, which is Cloudflare. It's down a little bit today. Tupperware is down today. I may have to get rid of that one. Blink Charging down, but Progeny is up. Apple is even. Palantir is just off slightly, and I'm up on Fiverr and on Tesla, which came in this morning. So that kind of gives you an idea of sort of how the how that shakes out, on the buys. So let's see. Let's get to some of the questions here. Thank you very, very much for holding on, and I hope that everyone had a nice weekend. And we're going to get into some of the slides and some of the ones right now. So let's take a look. Let's look at TikTok first. Thank you for holding on here on TikTok. Okay. What is the program? What is the program you're using? I'm jealous. As we use can't do business. I use a program from Investor Business Daily called Smith, and you do have to pay for it, but it's very powerful, and it does earn me quite a bit of money. So I do like it. I do like it as well. Now we have another question from Biza 80469. I buy Nio. What's your opinion about Nio? Well, the Chinese stocks. I mean, let's take a look at the chart for Nio, and it's not really my favorite stock right now because it's in a downward motion. I kind of want to show you this real quickly. All right, so let's take a look at let's take a look at Nio. Here we are with Nio. Now we first start with the weekly chart, so we want to go over to that weekly chart. You'll notice something very interesting here. We have started a downward motion on Nio. So right now is a very poor time to buy Nio, even though we have an extremely high relative strength. Now this is the weekly chart that we are using. They definitely had some very good sales increases, so that's good. But this downward trend is a little bit concerning, and as you can see, it's off today, 4106. I probably would not be in this stock only because of this motion. So let's take a look at the daily chart and take a look at that. As you can clearly see on this, the Nio went up very nicely, and then unfortunately turned the corner and it's headed down. So this thing is a definite sell if it breaks below this line. This is the red line here. It's the 40-day moving average, and it is currently at about 37.12. Now, if you're holding the stock right now and it falls below 37.12, you probably should sell it immediately. As a matter of fact, if you have lost more than 7% in this stock, you probably should sell it because right now we have a downward trend in this. So I'm sorry to tell you that, but Nio right now probably isn't where you want to be. Let's wait for the trend to reverse, and then if it reverses higher, then possibly we can get probably a better take on that. But right now, the trend of Nio is down. We don't want to catch a falling knife, so we don't want to let the trend move down. Right now, if you're more than 7% loss in this one, you should probably sell immediately. And also, you should consider selling at the 40-day line. So let's see. Next, Nanesh, thank you. Hi, Jim. What is the buy point on apps? Now, for all that you don't know what apps is Digital Turbine. And it's been on my watch list on the small portfolio, and I'll show you that in just a second. But let's first take a look at the weekly chart just to kind of get an idea if it's still looking good and still looking viable. Yeah, it definitely is. This is the weekly chart, and as you can see, this is a very nice weekly chart in that it has a very nice upward motion on the stock. Get this. There we go. Come on. Okay, so we're moving in. We're trending in the right direction. There we go. We're trending in the right direction with apps. So that's the first test that we have to look at. So let's next look at the relative strength. Well, that's excellent too. It's 99%, which means that apps Digital Turbine is better than 99%. It's in the top 1% of all stocks, so that's very good too. Let's kind of look at the funds, see how they're doing. Well, we want to see increasing fund ownership, and we definitely see it there. We definitely see some. So all those things are looking very good, and this is what's really great. We have a return. We have a cash flow and a 31% return on equity. When a stock goes positive, a return of equity of 20 to 25% or better is excellent. So this is just knocking down all of the criteria. So we're definitely looking like very, very good one to buy. Let's take a look at who's in there in terms of the funds. I want to look to see kind of what the fund ownership is on this. So see if we can pull that up, and just there we go. These are the funds that are currently in apps or Digital Turbine, and it's looking very, very good. I mean, we have some excellent funds in here. We've got Lord Abbett Developing Growth. This is a super fund, and this gives you an idea of who is buying this right now, and that's so important when it comes to the stock, because remember, when in a stock is only pushed up when the funds, the mutual funds and the other funds, are buying it. Individual investors like us, we're just little minnows following along behind whales. So sometimes we don't have very much, we don't really command that much interest. But when the funds are moving into it, that's when we want to be moving into it too. So let's look for a buy point. After all that, let's see if we could find a buy point on this. You know, unfortunately, we don't really have a great buy point on apps. It's sometimes they don't have a good base pattern that you could buy it. So the question is, where could you buy this thing? Well, you're probably not going to like to hear this, Dinesh, but my guess is the best place to buy it is right at the 40-day line, which is this red line here. So I would buy it. I would wait until this thing pulls back to 38.80, and then if it reversed off of that, then I would buy it. Unfortunately, probably cannot buy it at this level. Now, if you're a little bit aggressive and it pulled back to 43.90, then you could possibly buy it. So it's only a little bit extended from there. But right now we don't have a good buy point on Digital Turbine. That doesn't necessarily mean it's a bad stock or anything. It's a great stock, but it just doesn't mean that there's two ways that you could buy. You buy off of what they call a base pattern, which is like a cup with handle, cup, double bottom, and that kind of thing, or you buy on a pullback to one of the moving indexes. Currently, it's hugging the 21-day. That's this little green line here. But the best place to buy it would be if on a pullback to the 40-day line. As it reversed off, that's where you would buy it. So right now, the only real place you could buy this probably would be in a pullback below 39. And you need it to pull back, and then as it reverses back above that line once again, that's a good place to buy it. So I appreciate that comment very much. But I don't think right now there's a great place to buy Digital Turbine. So let's see if we can get another question from. Here we go. This is a comment on TikTok from Jay Coleman, and basically he says, "Hi Jim, any thoughts on Apple, AAPL?" Let's take a look at Apple. I'm in Apple, by the way, just so that you'll know. It's relatively slow moving, and it hasn't been performing quite as well as it has before the 4-for-1 split, which happened on the 31st of August of this year. It hasn't really come up to that level, unfortunately. But let's look at the weekly chart to kind of get an idea if we still have a good trend. It seems to have started to make a little bit of a trend here, which is nice, moving up. There we go. So it does seem to be in an upward trend. Let's go to the daily chart to see if there's any kind of buy area that we can look at. Now, I did buy it as it moved above the 120 range. Okay, because it's moving right up this green line. This is the 21-day exponential. Is there a really good place to buy this? Well, this is a kind of a slow-moving stock. It's not quite the relative strength that it used to be. As you can see, it's 82. So I'm hoping that it has formed a new upward trend. I'm afraid though it might have pulled back. This is where I originally bought it, was when it crossed about the 118 line. As you can see, this is the trend line, and then when it broke above it, I bought it. Now, it looks like it's pulling back. If it pulls below this 21-day line, I'll sell it and I'll have to wait. But right now, I would wait until it pulled back to that 21-day line. And the 21-day line currently for Apple is right almost exactly at 120. So here's a good game plan. If it pulls back to let's say it pulls down to 119 and then reverses, then that might be a good place to buy. If you're more than if you are this is moving relatively slowly relative to the way it was moving in the summer, so it's going to be a little bit easier to deal with. I wouldn't hold this thing if it moved below 117. So you want to set your stop loss on this at about 117. If it pulls below 117, it's unfortunately resumed a downward trend. Currently, it's trying to make an upward trend right now, and it seems like it's making that, but not quite. So I wouldn't necessarily go into the stock today. It's currently moving down. Again, you always want to try to buy as the stock is accelerating to the upside, and that's not the case here for Apple. So here's the thing: I would set my stop loss at about 117 on Apple, and if I was down more than 7%, I would sell it and wait for a more auspicious time to go into the issue. But it's still a great company, and that's just where it is. Any thoughts on Tesla? And of course, as everybody knows, I am a Tesla bull. And I do think that I have bought and sold Tesla now since last year about over 30 times, just depending on how it's running. Now, today it had a very nice move. And again, I was waiting for it to pull above 615 to make a pilot buy. I did make a pilot buy at the 615 level. I am looking, though, to make another buy, a full position, or possibly even more than that, when it moves above 650. Currently, it's trading at 639.83. It's up about $29, which is tremendous. But for Apple, for Tesla, it's not that amazing. It just seems to move always very, 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 very high and very, very fast. I do believe that we are on a new trend with Tesla. I do think it's an upward trend, as you can see from this channel that I'm drawing in here. Now, unfortunately, we're at the top of the channel here, so it's a little bit difficult to buy it at this point. I want to see, I would really want to see it basically pull above, above this level here. You see, and it's just almost reached that. So that level, basically, let's put the right on there, is right about there. That level is about 646. So I'm saying, to split the difference, if it moves above 650, I do believe it's going to go much higher, faster. So I want to buy this as it's moving up towards this 650 number. So I've set my buy order at right about 649. If it increases above that line, I'm probably a buyer. I was a buyer this morning at 615, which is right about here, as you can see. And you can see it started out in the morning and then it pulled above that, and I bought. And that's the beauty of what these buy stop limit orders do, because basically it's automatic, and as it goes above that, it will buy it if it exceeds that price. So my thought on it now, I think the next real buy point for Tesla is going to be probably at about the 650 level. So that's kind of how I'm going to be playing it, and I should, I'll be covering that more. I'll be covering that more on other things. Okay, I have 10K. This is a question from TikTok. This is TeslaCon. I have 10K at the moment. And which stock should I buy? Well, here's the thing. I recommend that you should not buy one, but you should buy 8 stocks. Now, why would you do that? Well, obviously, if you can concentrate your holdings, you're going to get a better result. That's always true. But the thing is, you have a higher risk. Here's how I trade a $10,000 portfolio. As a matter of fact, even a smaller portfolio. It's what I call my small portfolio of highly rated stocks. And here is how I am trading that right now. So I'm going to show you the small portfolio as it stands now. Okay, in a second we should come up with, there we go. There is coming up with the graphics. How would you trade $10,000? Now, the value of this portfolio is only $7,000. But here's how it works. Think of your account. Think of your assets as a pizza pie that has 8 pizza slices. You don't want to go in with any more than 1 pizza slice at a time. So, if you decide you have a good stock, buy one pizza slice, and then so forth and so forth. I have created this so that I always buy the right number of shares. Now you can see with Cloudflare, well, that's 13, but it seems to be larger here than one pizza slice. Why? Because when I bought this, it was just starting to grow, and of course it's grown 28%, 26% in 29 days. So that's pretty good. Now my Floor and Decor hasn't worked out as well. I've been holding it for 7 days, and it's down 1%. So that's not necessarily the greatest, but it's coming back. I'm in Fiverr, as you can see, but I'm only there with 5 shares because these shares are more expensive than the Cloudflare shares. So that's why I buy fewer of them. Again, just doing one pizza slice there. And then I just bought this one today because I did it on a buy stop order. I bought 22 shares of it. It's up 1% in less than a day, so that's pretty good actually. And if we can keep on that, we will go up even higher. Now I also have 3 positions in here that I'm yet ready to allocate. So here is my here is what I'm going to say to you. If you have 10K, take a look at my SPAR portfolio and see how I trade it with the watch list. Don't put all your eggs in one basket, but if the eggs are good and getting better, then you want to start to concentrate your positions. So for instance, if my position in Twilio, which I just bought today, if that improves and it moves higher, then I will add more to it, but I won't add it all at once. I'll basically pyramid into it. And that is how the small portfolio works. If you want to get access to the small portfolio, it's super easy to do. All you have to do is go to the www Dallas Trading Floor website and basically sign up for the action trade alerts. And also, if you look a little bit down on the page, you'll see where you could sign up for the access to the small portfolio, so you can see all my watch lists and everything like that. So that's how I would trade it with $10,000. Okay, so next question. Thank you for that. Let's take that from YouTube, and let's see. Okay, let's see. Okay, great. Hey Kyle, thank you. Happy Monday. Thoughts on CRISPR? This is one of my favorites, by the way. This is a gene editing Swiss company. This is a company in Switzerland that does gene editing, and I think it's very, very cutting edge. And I think going forward, this is just has some very I think it's going to be it's very, very promising. CRSP, I think CRSR, is that right? Yeah, CRSR. That's right, CRISPR. No, that's Corsair. I apologize. Corsair and not CRISPR. I was thinking about CRISPR. This is the game coming Corsair, so I apologize for giving that right on that. Well, unfortunately, as we're looking at the weekly chart, we have, unfortunately, a downward trending chart. Now, we don't want to buy on a downward trending chart. So that is currently what the trend is on this chart. Right now, it does have a very nice relative strength at 96, but we have a downward trending chart, so we really can't buy this one right now. Now, we could have bought it, but unfortunately, it peaked out and it's moved down. As you'll notice, there's some heavy selling going on here with this chart. Let's go to the daily to see. It peaked out at this 53.37. And as you can see, it's been down ever since. And this is not so good because until this thing reverses, we can't buy it. Remember, what we're trying to do here is wait for the stock to move down, and then once it reverses, that's when we come back into it. We don't want to catch a falling knife, so we don't want to be on the downward escalator like we are now. This is a downward escalator. So right now, this is not a stock to buy. Now, how and when would I buy this? Well, I do believe that this looks like it's probably going to find some support at this red line here. That is the 40-day, and I think that's about 30. So here's the thing with Corsair Gaming. Wait until it's pulled back below 30, and if it is on the, and if there is a reversal at about 30, that's where you want to start looking to buy it. Currently, there is some buying pressure in here, so we may be close to bottoming out. As you can see, that's a buy, that's a volume spike, and that's a buying volume spike. So that's good. Let's look at our checklist. We still have an excellent checklist, 7 out of 9, and we have 55 funds in it. So that is tremendous. Let's kind of look to see what the funds are in the issue. Let's see if there's any really good ones in there that we can see. Well, goodness, we have some total stock market. Yeah, we have some very good funds in here. These are all the funds that are in here. This is the first 41 of them. There's actually 53 of these. Oh, it's actually more now. We're up to 73 funds in this. So we definitely have a lot of funds that are accumulating this issue. But the thing is, we don't want to buy when it's on a downward movement. So let's look at a few other things about Corsair. We have nice sales increases here, like that. We also have, again, the funds. There were 55 funds in September, and they are increasing, as we saw. 51% of the stock is owned by funds. That's very good. Typically, a stock will appreciate the most from about 20% fund ownership to 65 or 70% fund ownership. We have good cash flow too, so everything is looking good. The sponsorship rating is excellent too, so we have a very good stock here. The problem is we currently have a downward we have a downward trending line, so we don't want to buy this one right now. We want to wait a little bit until we see it reverse. And so this is a watch list stock, and I'm going to actually put it on my list, CRSR, and that's going to go on the watch list probably for me. I want to wait for a reversal, and then when there's a reversal, probably at about 30, that's where I might be looking to come in, because it's a very strong stock. It's just right now, today, probably not a good buy because it is pulling lower. All right, so let's see. I said, you have any thoughts on Lie? Thanks so much. Lie, of course, as everybody knows, is a Chinese EV maker. There's several out there. Of course, Nio and Lie. Let's get okay. Put it in the wrong. There we go. Yeah, Lie. Okay, this unfortunately again has the problem that a lot of the other stocks are. It sort of has peaked out. This is the issue with a lot of the Chinese stocks right now. They're seeing a little bit of weakness. It's seeing a little bit of weakness, and as you can see, it is definitely on a downward trend. Now, it does look like we may see some support on this at about 28.68. There's some potential that we'll have some support at that line. But right now, the trend is downward. And so that's on the weekly chart. Let's look at the daily chart. Yeah, we definitely have some selling going on here. We still have a really good 97 relative strength, but this little blue line here, this is the relative strength line, is pointed downward. Unfortunately, we don't want to buy a downward trend. It just isn't worth it. As you can see, we may get some support here at 24, but we don't know yet. We just don't want to buy this thing right now because it is downward trending. If you have bought this and you're down more than 7%, I'd consider closing your position, waiting for it to bottom, and then as it moves higher, as it moves on the rebound, then you might want to get back into it. But currently, right now, it is not a buy. You want to watch this one. Don't buy it. It's got a downward trend. Peloton had a nice little jump today. Well, let's look at Peloton. Peloton has had quite a run. PTON. I just wonder. I guess as long as the country's locked up, then it might be a good buy. I'm currently not in it. Now it does look like it's moving right on the 40-day line. So let's take a look at that here. Let's start out with the weekly chart again. Yeah. Okay. So we've definitely seen the top and bottom of the consolidation. As you can see, this is the top of the consolidation, and this is the bottom of the consolidation. And what we had is it pulled down. This is why you want to wait for it to bounce. It pulled down, it bounced, and then it's moving right back up. And it seems to be moving very nicely up this, up this 40-day moving average. Let's see if we go to the daily to get an entry point for you. Yeah, it's pulled up nicely. It's pulled back a little bit, but it seems to be trending very nicely on this line here. So that is good. So let's draw the channel. Okay. So we're a little bit at the top of the channel. I do expect this will reverse, because what's going to happen is it's going to pull up to this line here, and then it will reverse back to this 40-day line. So there is really no buy point on this right now. The actual buy point on this is 139.75, and we're well below that at 121.91. So in order to buy this one, you're going to have to wait for this thing to reverse down and pull back to this line here, which is the 40-day. And let's see if we can get a number there for you. It's about 114.29. So if this pulls back to about 114 and then reverses, that's when you could buy it. Let's look to see if it's got all the buying criteria. I do believe it does, because it's got a 98 in terms of its relative strength. That's extremely strong. Let's look at the checklist. We have got 8 out of 9. That is excellent. Let's look at the funds, because that's what we're always looking to see, is how many funds are holding this. Because if funds are coming into it, there's a high probability that the stock will move higher. And we have got a lot of funds in this. We have a lot of funds in this. So we have strong fund ownership. 96 funds in this. Wow, that's really good on the number of funds ownership. So here's what I would do if I wanted to get into Peloton. It's not on my watch list, but it is a good stock. Is I would wait for the thing to pull back to the 40-day line right here. That's the line right here, and that is about 115.50. And then if it pulls back to that line and it reverses, then I think you might have a buy. So very strong stock, just not a day to buy it because it's not at. There's two places to buy it. Of course, we wanted to either buy it off of a base pattern, such as a cup with handle, double bottom, or consolidation. That buy point is here for this one at 139.75. But if I want to buy below that, I'm going to have to buy it off of a moving average. And currently, the one that it looks like it's closest to is the 40-day moving average. This is that red line there. So it is a watch list. Wait for it to pull back to that 40-day line. If it reverses, then I think you might have a buy point on it. But right now, I would definitely watch list it. Okay, so let's see from TikTok. Palantir, PLTR, and of course I'm in Palantir. Let's pull that back. Yeah, there we go. And this is Palantir. This is a software company that has actually recently moved from Silicon Valley to Denver, and it is one of the venture capitalists is Peter Thiel, who was behind a lot of very other famous ones such as PayPal and Tesla and many of the other good companies there. So very good track record on that. So let's look at the kind of how it's pulling up. It's up today just slightly, not a lot at all. But let's look at the weekly chart, because that's going to tell the tale. It looks as if we have a little bit of a consolidation right here at about this level. So this is interesting. About 126. So I do believe that we're getting a bit of consolidation here. That's good, because it needs to rest a little bit before it could go higher. It's currently 98 relative strength, which is tremendous. This is an IPO base, so this is a very new stock. So that's looking good. Let's take a look at the daily chart to see kind of how it's trading, if there's an entry point here. You know, it's nicely above the 21-day line. I'm liking to see that. We're definitely above that 40-day line, which just was established. This thing has just been out literally for about 50 days. Not a long time. But I do think that we are forming sort of a a box here, which is getting ready to possibly move to a higher level. Let's take a look. Currently, let's take a look at the funds to see kind of if we still have really good fund sponsorship. So I'm going to go up here to the funds, and I'm going to look to see who is in this. So let's take a quick look. All right, there we go. Okay, so currently, wow, there are more funds than there were last month. That's for sure. Currently, we have 85 funds in this, which is big. So we definitely have funds that are acquiring this stock, and that's so important when it comes to moving a stock up. These top stocks here are the ones that have significant significant exposure. Let's take a look. They're mostly Vanguard. That's interesting. Vanguard is definitely one of the ones that's heavily in here. Interesting. Vanguard is in here. And so, yeah, we have some very good fund ownership in that. So that's good. Now, the question is, can we buy this thing, and where can we buy this thing, and how do we buy this thing? That's always the issue. Let's see if there's any entry point. And this is going to be a tough one to enter because it's just such a new stock. Now, the only real buy point right now is off of this line, this 21-day line, and currently that is at about 23.35. It's 27.12 right now. So really, unfortunately, it is not really buyable. But if you wanted to be aggressive on this, I would wait for it to pull back to maybe about 25.20, which is right in here, 25.20, and I would buy it if it pulled back to 25.20, and then it reversed off of that. And you always want to buy it on the uptick, but at 25.20, if it reversed above that, then I think you could buy it. But right now, unfortunately, it's not a good place to buy it. But it's still a great stock, and it definitely should be on your watch list. Because it is going higher. I do believe. All right. So this question from Luciano. It's time to buy TBIO. Stock is going up, and we have no reason why. Well, maybe we can find a technical reason that TBIO is going up. Let's see. TBIO. All right. Okay. Translate Bio develops therapeutics for the treatment of diseases by protein and gene dysfunction. I wish I had paid more attention in my chemistry class in college. And why is this going up? Let's look at the weekly chart first. Let's see if there's any reason. Okay, well, there is I can see something here on the chart that might be helpful. The time to buy any stock typically is when it's making higher highs, and that is the case with this. As you can see, it has moved above the higher high. So we have very nice, we have very nice motion on this, up $1.83. Now the question is why? Well, I'll tell you why. It's very obvious. It's in the sales. Look at those sales. They're just off the charts. So they have had some excellent sales. Look at that, earnings per share. So that is the reason this is moving much higher. This actually, TBIO, this should be watch listed because this is looking very, very good. This is a pattern that we definitely want to see. We definitely want to see. It's not technically a cup, but it's pretty darn close to it. Yeah, as you can see, it's pretty darn close to that pattern. And it's not quite at the high, it's not quite at the higher high, but it's very, very close. 2809 would be the number there. We're at 2692. So we're just below that. Here's what I would do if I were going to buy this one. I would buy it right as it comes right above that 28 line. So I'd buy it at about 28.30 is where I would buy that right there. But it has to move above there, and then I would buy it. Because remember, I'm interested in getting all the upward momentum. And again, we have very nice volume there. So let's look to see what the checklist looks like. Wow, that's a great checklist. 8 out of 9. That's what I'm looking for. And let's look at the fund ownership. Let's kind of look through the ownership of these funds to see how many funds are in this as well. There we go. Okay, great. Wow, we have some good ones. Fidelity Growth. Okay, this is a top fund. If you see this fund in any of the stocks, Fidelity Growth, that's one you want. So obviously the big boys over Fidelity, which are very good at this business, they are buying this. So this is very, very bullish. Let's look. Wow, we have 96 funds in this. Wow, even more. I'm sorry. We have more than that. My computer can't keep up. There's so many funds in this thing. Look at that. Boy, 109. Oh, even more. My goodness, we have. Wow, we have hundreds of funds in this. I had no idea. Thank you for turning me on to this. A lot of funds are buying this. This is incredible. Let's look at the sector. The industry rank is 38. That's excellent. This is a very, very good stock. Look at that. Look at that. Let's see if there's any news on it. Wow, new gross. Okay, well, definitely, this is definitely a watch list stock, and I would buy it above 2809. I'm going to be putting this on my buy list as well. So, if this thing moves above, the higher high, which is 2809, then I think it's a buy. So, thank you very much for that, Lucy. That's excellent. That's excellent. I would buy this above 2809. So thank you so much for turning me onto that stock. And I may put together a video and show you kind of how I would buy that if I were going to do that. So thank you very, very much for that. Quidel and GRBK. Let's look at Quidel first. Let's look at Quidel. QDEL. And let's take a look to see. And it develops rapid diagnostics. Okay. 206. Let's look at the weekly. Okay, well, this is a little bit compromised here. I wouldn't probably buy this one. And I don't typically like to buy anything below this line right here, which is the 200-day moving average, and that's right at that line. Now it is pulling up today. It's up $4.37. But I do not like this kind of motion on it. So let's look at the weekly daily chart to see if there's anywhere we could possibly buy this thing. So let's look. Okay, on the daily chart, no, it looks like it may have turned the corner, but I want to see some more. I would only buy this if it moved above this line here. This is the 40-day moving average, and that would be about 228. It's 206 right now. So therefore, it is not buyable at this time, but it does have some very nice volume, and it seems to be people are moving into it. Here's the thing: let's take a look at the checklist. It's 8 out of 9, so that's excellent. The phone to ownership is unbelievably good, 738. So the funds are buying this. There's just no question about it, and we have extremely strong relative strength at 92. All of those things are very, very bullish. Now, the problem, though, is we're just not at the right point here. There's several places that we could possibly buy this. I think the most aggressive would be right here at the 40-day line. And the safest bet would be if it moved above this number here, 305. If it moved above 305, then it's definitely a buy. Currently, though, I want to see this thing recover up to at least to the 40-day line before I buy it. This is a very good one, Quidel, QDEL. So I'm going to put that on my watch list too. So thank you so much for that information, and hopefully, make that work for somebody out there. All right, I have a question from. Let's see. Thoughts on Airbnb and DoorDash? Looks like they continue to drop. Absolutely. Part of the reason, let's look at DoorDash first. This is the reason why. And this is a very good question. Why don't you buy, people ask you, well, Jim, why don't you buy IPOs as they come out of the box? Why? Because almost always they drop. Almost always they drop, and then they find support, and then they come back. So it's not a good idea to buy them as they come out of the gate. So let's look at Airbnb. The symbol is Airbnb. And a lot of people bought this right when it came out. And unfortunately, they've all lost money. And let's look at that. So let's look at the weekly first. There's not much of weekly because it's basically only been out for a day or two. But look at this. This is a very telling tale here. It comes out, its IPO is 68, okay? All right, but only the insiders get that price. Then on the first day of trading, it trades all the way up to here. It trades all the way up to over 160. But guess what? People go home for the weekend, they come back, and they say, well, it's not looking as good as I liked it to. So they're starting to sell. This is the big insiders. Currently, it's at 130. So if you bought it on the first day, as it came out, you would have probably lost at least $30 a share. This is why you need to wait 3 months typically for a IPO to cure. It takes time. An IPO needs to come out, and then it needs to trade a little bit of time, and then it comes back. Let me show you another very interesting IPO that just came out called Snowflake. And I want to show you this. It's the same thing. SNOW is the symbol for that. And I want to show you this because I think it's very instructive. The first day that Snowflake came out, as you can see, it just said the same thing that Airbnb is. It went way up. It went just stratospheric. Okay, but the next day, look at what happened. It went down all the way. And then it started to get its sea legs, see? See how it started to get its sea legs there? And then it came back up. It made one attempt at 301, and then it formed a buy point. The first buy point, you see, wasn't almost for a month. The first buy point, which is 301, didn't happen until then. So really, the first time that you could have bought this was when it went above this 301. So basically, the first time that you really could have actually bought this stock relatively safely would have been about December 20th. Okay, and now you see, now it's starting to move higher. Okay, but it's pulled back a little bit. So you have to wait a month, basically, or at least a month, and usually 3 months. You have to wait to open, and then cure a little bit here, form a buy point, and then once you exceed that buy point, then you can get into the stock. So I just wanted to kind of show you that as a as an example. So let's look at Dash. I think the Dash is the DoorDash symbol. Yeah, there we go, DoorDash. So let's look at DoorDash and see how that one is traded too. And this just came out as well. This is an IPO. Let's look at the weekly chart first to kind of see if there's any idea, because last week, you see, it went up very nicely. As you can see, it went up very nicely. But come Monday, we're back down, right? Okay. All this volume, you see, all this was buying volume the first week, but now people are starting to sell. So let's go to the daily chart. You shouldn't buy DoorDash for at least 3 months, because that is going to be the time it takes to shake it out. So it's currently down to 150. So basically, we round tripped it. We came out here, we went all the way up, and then we came all the way back down. So this is the reason that you don't want to buy an IPO as it first comes out. You want to wait about 3 months. So that's a very good question. And I know it's frustrating, because you think, gosh, I want to get in on this great thing. I know about DoorDash. I really like it, but it just doesn't work like that. You need to you need to do that. Okay, here we go. Christian, thank you for this. The Oracle of Omaha, as you well know, Warren Buffett, is talking about Apple. Well, you know what? Here's the thing about Warren Buffett. He's a great trader and all that. But here's the thing. He is a fundamental investor. He invests on fundamentals. And I am a technical trader. I'm looking to move along with the trend. Now, the difference between him and me is a lot. He has billions of dollars, and he's been doing it for, almost 70 years, I think. For me, that's a little bit different. I'm looking to jump on the elevator, ride it up a few floors, and get off. Why? Because I have less capital than him. He will be speaking on Apple. I think Apple is going to do well over the long period of time, but it's not going to be quite as fast a mover as it was in the last year or so. Part of the thing is because it's now, I think, the most valuable company. And in order to move something that big, it takes a lot. It takes Berkshire Hathaway. So I wouldn't read too much into that with Warren Buffett. But I do think he's a great investor. Okay, ResMed, RMD. Thanks for this, Tarika. This is ResMed, RMD, and this is the sleep apnea company. Done very well. Let's see if I can pull up the chart Let's see if I can pull up the weekly chart on it first. Let's go to the weekly. Here we go. Yeah, we have a little bit of a downtrend here on it. I mean, nothing serious, but we definitely have it. This is a failed breakout, basically. It was trying to break out of a cut base at 209. Unfortunately, it didn't have quite enough stuff to break out, so it pulled back, and it's consolidating here a little bit. But these are very good to buy when they're like this, because a lot of times what will happen is you get this cup, and you see this is the handle. Okay, so if this thing crosses above 209, and it's 206 right now, where you want to buy this is as it goes above this 209 level. This is why many times I use the buy stop limit order. And why do I do that? Well, because I really don't want to buy it unless it pulls above this neckline here. So what I do is, instead of just buying it on a limit order, I set the stop at 209. So the order is not activated until it goes over 209. So if it goes above 209, then my order to buy it is activated. Typically at about 10 cents above where I activate the where I activate it. The reason why do I hit 10% above? Because I want for it to punch through with power, and then I want to buy it. I want to buy it on an uptick. I don't want to buy it on a downtick. Now today I could buy it, but it's below this neckline, so I really don't want to buy at this level. I don't think there's enough support. Even though it's pulled above this green line here, it could easily reverse down and continue the downward motion that it already has. As you can see, there's already a downward trend on this. So here's how a cup with handle works. There's a cup, and then it pulls down, and then as it's pushing up above the neckline, that's where you want to buy it, because that's where the most strength is. So thank you very much for that. That is definitely a watch list stock, RMD, ResMed, and it's very top rated. So that has a lot going for it. On that. Let's see if we have another question from TikTok here. Pfizer, I'm probably not going to handle Pfizer. Nio, Solo and Light. Okay. Apple. Okay. Well, okay. Here we go. What's the best bet from day trading? I'm not a day trader. I will be honest with you. I don't like trading against the algorithms. I like trading with the algorithms. That's why I use buy stop limit orders, and I try not to trade against the algorithms. So that's why I don't want to do that. Hey, thank you very much for watching from Greece. I appreciate it. If you want to get an idea of kind of what I do, how I trade, I actually am showing charts on my YouTube site at youtube.com/DallasTradingFloor. So if you want to get a look on that, that's a good place too to get that. So thank you very much for watching from Greece. I so appreciate it. Let's see. Okay, so here we go. I have 10 shares of Tesla at 368, 637.28, and 14.5 of Nio at 47.6. What should I do with them? Well, here's what I do. I would sell my Nio and I would buy more Tesla. That's my opinion. I do think that if Tesla goes above 650, it's probably going to go to 700 or at least 750. Now, I don't know if it'll make it by the end of the year. I was predicting a few years ago, seems like a few years ago, I was predicting a few months ago that Tesla would possibly reach $700 by the end of the year. Now, we still have a little bit of time to go on that. It may actually get there. But I definitely think it's going to be above 650. So I'm pretty confident with Tesla. Okay, now with Nio, unfortunately, I'm not as confident because it's currently in a downtrend. I think that it's always better if you only have a little bit to try to concentrate in your winners. And I think that Tesla, it's a very unfair world, but Tesla is the winner in the EV space. And I know it's a lot more expensive, but don't think of it like that. Think of it as your increase in, you think of it as the increase. So I definitely think if I were in Nio right now at 47, I would probably sell it and I would buy Tesla. That is my that is my 2 cents there for that. Okay, great, thank you. Buy point unplug. Let's look at plug play, and plug play, is an interesting one too. So let's see if I can give you a buy point on plug play. PLUG is the symbol, and let's take a look at the weekly chart first. Okay, it's pulling back a little bit. Okay, so it seems like it's right on the 21-day exponential. So let's look at plug play first to see if we have an entry point. It seems like it's staying well above, it's staying nicely above the 40-day. So that's good. We have extremely strong relative strength, so that's good. Increasing sales, love that. We do have a little bit of a cash flow issue. It's a growth company, so it doesn't matter. Sales are the most important thing there. But most importantly, we have these increasing funds. So that's very, very strong. Let's look at the checklist here. We have 7 out of 9, so I'm very confident there. Now, the question is, where is the buy point on this? Well, let's go to the daily chart. Really, there's really not a good buy point. The last buy point was here. Basically, when it came below, it closed below the 21-day line. That's this green line here. Okay, it pulled below that. That was the last buy point. Here's what I would do. I would see if this thing pulls down to this line, and then if it reverses, I would possibly buy it on that. So this is a very good stock. Here's the thing. The buy point on it is 24. Now, the question is, you say, well, it's 25 right now. No, you have to wait till it pulls below 24 and then reverses. And then once it reverses again, that's where you want to buy it. So 24 is approximately the buy point on, that 24 is about the buy point on plug. So it's good. It's a good stock. All right. So please explain PFE. What's going on with that? Okay, you're wondering, and a lot of people do. Well, Jim, Pfizer has all these things that are going out, and it shouldn't be going to the moon. Well, you would think it would be, but that's not how stocks work. Because remember, is that Pfizer? PFE? Yeah, let me get that right. PFE. So let's look at PFE. This is Pfizer. Okay. All right, Pfizer. And you say, well, why is it going down? Why? Well, I tell you why I believe it's going down, and this is a failed breakout. You see, it tried to move above this line here. The buy point on it was 39.45. Well, it moved above that 41.99, but then there was not enough power, and it pulled back. It tried again, and it's pulled back. Now, the question is the third time the charm? Well, I would be hanging around for that, and the reason I wouldn't is because we only have a 52 relative strength on this. So even though they have the vaccines and everything like that, almost all of the funds that can be in it are in it already. And as you can see, we have 33,529 funds in it. So basically, there's no more funds. I mean, the funds are already there, and that's pretty much it. So I would not be a buyer of this one. And the why? Because relative strength is 52. We have we have negative. Sales are decreasing, actually. Isn't that interesting, right? Okay. And so that's not good. We still have a lot of profitability here. We have great cash flow, but remember, the market wants to see tomorrow, not today. Today is earnings. Tomorrow is sales. So we want to see increase in sales. So on Pfizer, unfortunately, even with all the good news with Pfizer, I don't think it's where you want to be. I just don't think it's where you want to be. I don't think it's a winner, unfortunately. Okay, so let's see if I can get this is probably going to have to be pretty close to the last question. Sell time for Tesla Friday. I'm not sure, but I will be. I will be getting back to you hopefully if you're on the action trade alerts on Tesla. Let's take a look at Fastly. This is one that I may be going into as well. This had a tremendous pullback, which shook a lot of people out. So not necessarily the greatest. I think it's FSLY. Let's see if we can pull that up. Yeah, Fastly. Okay. It's pulled back a little bit today. It pulled back a little bit. The question is, can we buy this thing? Is it buyable? What's going on with Fastly? All right. Well, we still have a really excellent relative strength at 98, and we do have an upward trend. I'm really liking that. Okay, this actually may be close to being buyable, and the reason is because it looks like it's pulled back to the 21-day line. Not quite, but this is a very bullish signal that we have. The 21-day exponential is just moving above the 40-day. That means this has price. This is increasing in price, and this is the trend. So that's very good. Where would I buy this thing? Well, I think that the next buy point really is back to here. It's back to this 117. So here's what I would do. I would watch this thing, and if it crossed 117.79, I would probably be a buyer right about here. Oops, there we go. There we go. I'd be a buyer right about here, this 117 mark. But let it pull up, let it show some strength, let it pull above this line here, and then if it does, then I think we have smooth sailing from about 119 on up to 138. But we're too low right now at 94.25 to buy it, unfortunately. Well, I have gone through an entire hour, and I thank you so much for bearing with me. I also have some new some new videos up on YouTube. So if you can, jump on over there, and please subscribe, of course, to youtube.com/Dallas Trading Floor. Really appreciate it if you do. It helps me out a lot with making these videos. And of course, hit that like button. Of course, everybody likes that. And that I will be back tomorrow at 2:30, from 2:30 to 3:30 Central Time, here on Dallas Trading Floor. See ya soon.